We're starting off with the regular trading hours chart here. So regular trading hour shows the difference between where we settled yesterday at 4:14 p.m. Eastern time, and then we opened up at 9:30 Eastern time. So that difference is the opening range gap, or regular trading hours opening range gap, and it's abbreviated by RTH ORG. The high is the opening price because it's higher than where we settled at the previous day. That's regular trading hours opening range gap low. This is also the price level that you would have noted as the 9:30 opening price. Okay, so you can always add that in the description as well. Midnight opening price, Eastern time, I mentioned that yesterday in the live stream, you want to have that price. And then we had a sell side liquidity pool, and we'll look at that in here. I kind of posted that already and stole the thunder, but I told you you needed to do this for your homework. But the market trades up into this fair value gap, which is the SIBI. I told you to have that and grade it, and those levels were shown to you yesterday. And 111.75, that's this level here. And man, it's almost as if the stuff I teach works precisely. The market rallies up, stops dead in its tracks, looks like a big bull flag, and then it's not a bull flag. Okay, and then we have a sell side balance, buy side efficiency. We hit it here, return back into it, break away from the consequent encroachment of that daily SIBI, which is this candlestick's low, this candlestick's high. There's that 25,0630 level there. And we break. We come back to regular trading hours, opening range gap high, or opening price at 9:30 Eastern time. We trade through it, come right back up, hits it. This is how you see it as a short. You have all this unfilled price action. It traded there overnight in electronic trading hours, but in regular trading hours, it's like a big vacuum. Remember I was telling you that if you have, the analogy I used was these vacuum sealed bags, and you use your vacuum cleaner to suck the air out of it, and you can store things much more efficiently because it flattens it down. When you break that seal, what's going to happen? All the air is going to rush right back into it. Well, that's what's happening here. When you break the seal, it goes back to the regular trading hours opening range gap high, or 9:30 opening price, hits it, starts to break down, trade right back up, and then we go right to inside the opening range gap quadrants. So here's opening range gap high, upper quadrant, consequent encroachment, lower quadrant, low. Okay. And we have price breaking aggressively here, consolidating, one more break lower, trading back to midnight opening price, and trades to the lower quadrant here, takes one more time, touch that before it breaks lower, and completely closes in the gap. Now I want to take you over to the regular trading hours chart, and I showed you on Twitter or X this in here, and then we rallied up, and we come right back down in. During the macro, 7:50 Eastern time to 8:10, that's my ICT macro time, this trades right down into a quadrant level. I want you to look at your charts, and you'll see it. It stops dead right on it to the tick during the macro. It's probably random. And it rallies up, consolidates, and then we have this drop down at the opening price at 9:30. So opening range, first 30 minutes. It's not 15 minutes. I don't care what anybody tells you. It's a 30-minute interval. We drop down during the first 30 minutes. And then the first presented fair value gap here, we trade, excuse me, we trade down into the low of the morning, and then we rally back up to first presented fair value gap, which is now going to act, because we have relative equal highs up here, smooth edges. I was in Lumi Traders on live stream, and I called this out live to watch the first presented fair value gap, and then use this as the draw. And we opened up with a run here, dropped down into consequent encroachment, and then volleyed higher, taking out the 25,025 level. That was the only thing I had time to kind of like illustrate. And then it rallied up even more. It went back to regular trading hours, opening range gap high, accumulated more here, and ripped higher up into 25,110 and 111, which is here. That's this upper quadrant of this SIBI. Perfect. Are you starting to see what I mean by I'm not surprised by these things? And when everybody in the past has always said, you know, he's got to be cherry picking, he's got to be photoshopping it, it's got to be something extra, it's got to be all these different recorded devices, and then he picks the one that works perfectly. I don't need any of that stuff. Like, I don't need any of that. Like, I don't need crutches. So you can see how the things I'm teaching you, just like I did in that live stream yesterday, while albeit vulgar, it was literally me giving you a master's class in price action algorithmically with my own language. That way you can see, it's like me pulling the veil back and you can see the real me. Like, this is the stuff I have had for decades and nobody else has had it. And I'm just revealing a little bit of things that people say all the time, like fair value gaps and imbalances and order blocks. It's a guess. Wrong, Cubby. This is precise. It's really, really perfect. It's perfect. And when you understand the science, when you blend them together, all you're doing is waiting for that to agree with time. Time. When this market turns here, it's entering a macro. This at this price, the opening price at 930, it's during a macro. It rips and goes higher. It spends its time up here, time distortion, then it folds, goes lower, trades right back up into the opening price at 930. We consolidate. This segment of price action here is just the overlapping of this rectangle in pink and this being in a different hue. So it's going to give you this kind of color here. That's not me showing any kind of like inversion fair value. I mean, that's what I'm not representing there. The inversion is the yellowish, almost pale orange, what's being shown here. This discoloration is just because they're overlapping. There's nothing I can do about that. So we trade back to first with the fair value gap in here, and then we fold over down to lower quadrant of the opening range gap, down to a full closure of it, and then we trade down into 0.75 or the lower quadrant of this wick, because now we're working back down into the range of this candlestick. So if once we go below this candlestick's closing price, we have to have these levels in mind on our chart. And you can see it trades right down to the lower quadrant there at 24,672.5. I'm saying up, I should be saying the upper quadrant, not the lower quadrant. The upper quadrant here at 24,672.5, and that's what you're seeing here. And if you go even further, you'll see that there's relative equal lows here. The one to the right is slightly higher. That means it's a strong candidate for a run on liquidity. And it dove all the way down, hit that end upper quadrant of this discount wick. And then look at the repelling back up that it showed here. Pretty wild volatility. I told you that was going to happen. Yesterday, I told you that's what's coming. And if you're not careful, if you don't know what you're doing, you're trying to trade without stop losses because you think you're going to be better than the average bear, you're going to have your clock cleaned. And there's just simply no reason for doing it like that. So that's it for today. Short, sweet, direct to the point. And I'm going to wish you all a very pleasant evening. And if Lord willing, I will touch base with you tomorrow.